and welcome. You're watching Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me is Cheryl D'Souza. And viewers, this is your show where you get an opportunity to ask all your stock-related queries from our experts. So do get ready for that. But before coming to taking all your queries onto the show, let's have a look at what the markets are up to. So Cheryl, today, a weekly expiry for the Indian markets. But other than that, if you look at the move, one day up, one day down, it's very interesting to see how the markets are doing right now.
Absolutely. Well, good morning to you, Shrishti. And if you look at the markets, pretty volatile trading sessions we've been having of late. And today also no less. Right now, we have actually inched out from the day's lowest point. Right now, if you look at the benchmark indices, 0.2% downtick coming in for the Nifty, ditto coming in for Nifty Bank as well, which is moving in tandem with the benchmark indices. If you look at the way, which are the companies that are moving higher in trade today, so you have UPL, that's the top gainer on the Nifty as we speak, followed by Tata Steel as well as HDFC Life and SBI Life. But on the losing side, you have Adani Enterprises, which is actually seeing a knock of excess of about 3.5%. And we'll talk more about Adani Enterprises, why such a reaction coming in on that particular account or in the BNSN lens segment. But apart from that, you have Titan, which is actually seeing a downtick of about 1.3% on back of a brokerage note. You have HUL, Adani Ports, they are also seeing some pressure in today's trading session. Talking about the sectoral indices is the media index, that is the top sectoral loser in trade today, followed by power as well as realty index. But on the flip side, this is metal, which is actually holding the fort today or as well. 0.6% uptick coming in for BSE metal index. You have also oil and gas index that is seeing some good up move in today's trading session. But that's the way how the market setup is looking like. But Shrishti, as mentioned, Adani Enterprises, that one is seeing a knock, and not just Adani Enterprises, also the group's counters that are under pressure.
Well, yes, absolutely, Cheryl, and that's the big news that's following this particular counter, as Adani Enterprises is coming up with an FPO of over 20,000 crores, and that's a big FPO by the group. And the floor price of this FPO have been set at 3,112 rupees. And they also say that they are offering a discount of 64 rupees for the retail investors. So the big question that we are asking onto the Buy Now, Sell Now lens is that, is there a chance for the retail investors to go and invest in the FPO itself? But before coming to that and getting the expert advice on that, we have been joined by Soumit Sarkar with more details on this. Get more details on Adani Enterprise FPO from our colleague Soumit Sarkar. But before that, let's have the technical outlook from Kunal. And Kunal Bothra is live with us in the studios. Very good morning, Kunal. How do you look at the move in Adani Enterprises? It's following big news on the FPO side. But for the past so many days, we are seeing Adani Group of shares clearly under pressure. Today itself, Adani Enterprises is one of the top losers in Nifty 50 today. How do you see that move happening?
Good morning, Srishti, Cheryl, as well as everyone. My belief is that Adani Enterprise is actually going through a corrective phase, possibly around this 3,400, 500 mark is where the stock should find a bit of stability over here. In technical parlance, it's come back towards a major support point. So it's a channel pattern support for Adani Enterprise, which has been going on for the last 1.5 to 2 years for the stock price. And it seems to be that the stock is coming back towards the same support point. So possibly in the next 1 week, if the stock holds on to this 3,400, 500 mark, I think it could actually turn out to be a good opportunity to try and buy the stock.
All right, so that's the take coming in on Adani Enterprises. That's the technical view. But let me just check if we have Soumit with us, joining us live right now. All right. All right, we will go to Soumit in a short while from now to just understand what exactly Adani Enterprises is doing with this FPO raise, where they're going to look at using this proceed. Because if you look at the details or the finer details of that particular FPO, we know that the issue size is about 20,000 crore rupees. The price band that they have set is 3,112 rupees to 3,276 rupees per share. Per FPO, that is. Also, the retail investors are likely to get an additional discount of about 64 rupees. What are they planning to do and where they're planning to use this particular proceeds? One is they're going to use it as a capex of around 10,869 crore rupees, and that they are going to use for green hydrogen, airport as well as road projects. Other use of the fund is they are going to look at debt repayment of around 4,165 crore rupees, and for general purpose they are going to use about 4,966 crore rupees. So that is how they're planning to utilize that fund from the FPOs. But Avinash is here. A very good morning to you, Avinash. And the key question is, what should investors do? Do you think that they should go ahead and subscribe to the FPO? Should they look to exit from Adani Enterprises right now and then go ahead and look at subscribing to the FPO? Do you think that's a good way of looking at this?
Yeah, good morning, Cheryl. See, first of all, I think you're right in mentioning that most of the retail investors would try to sell out in the secondary market and apply in the primary market, that is the follow-on public offer. Considering the fact that retail investors are going to be given a discount of 64 rupees. But Cheryl, one fact which I would like to make very clear is that whenever such large mega issues hit the market definitely turns a little weak because a lot of market liquidity gets sucked out from the system. And there have been earlier examples like LIC, Paytm, Coal India, where we have seen that typically in such kind of issues it takes a longer time for investors to make money. So those investors who want to take a longer term call should only apply in the follow-on public offer. I mean, my sense is that this follow-on public offer would definitely get subscribed comfortably. But in terms of the risk reward, I think only if the investor has a long-term view, one should look at this. Considering the fact that the stock price which Kunal mentioned, the frontline share is going to be under pressure because obviously the discount is quite significant, and obviously since the issue is large, my sense is that the market now currently does not have that kind of appetite, in a very comfortable way, which could digest this issue comfortably. And more importantly, they are doing this issue just ahead of the budget. So, we don't know what can come out in the budget. So typically only long-term investors and those who can wait in for the next 12 to 18 months can apply for the follow-on public offer. But do take into account that normally the history of the market says that large mega offers like these has definitely a negative impact on the market sentiment. So one has to be a little cautious also at the same time.
Okay, so that's the view coming in on Adani Enterprise FPO. That's the technical view from Kunal Bothra, that it is a good opportunity to accumulate this particular counter. And for Avinash, for the long-term investors, it is a buy on Adani Enterprise. But with this, it's time to slip into a short break, viewers, but don't go anywhere, because as we come right back, we'll be taking all your stock-related queries.
Welcome back. You're watching Buy Now Sell Now on ET Now, the show where we get you answers for all of your stock-related queries. We are live on YouTube, Facebook, as well as on Twitter. You can write to us on those platforms, or you can also write into us on the WhatsApp number that will be flashing on the top of your screen very shortly. Do mention your name, the stock you're intending to buy, or if you've already purchased that stock, then do mention your buy price as well as the quantity and the time horizon you're looking to hold into the counter. That will help our experts help you better. But before we get on with all the stock-related queries, Avinash, coming to you, volatile trading moves for the markets in the month of January alone. What should retail investors do in order to keep their wealth protected?
Cheryl, I think we are now approaching the union budget very soon. So I think investors should be very careful as far as allocating capital in 2023 is concerned. My sense is the markets will continue to remain volatile, considering global headwinds from US and Europe are pretty challenging as of now. So I think stick to the large cap companies, stick to the companies which are larger in size, and try to adopt a SIP approach. The markets being volatile, you'll get lots of opportunities to accumulate companies at a regular market kind of corrections. The market is in correction mode even today. So I think quality businesses are available at decent valuations, and I think one should obviously follow a disciplined approach in investing in the equity markets. And over the longer term, I think this strategy will definitely work out. But I think keep monitoring your stocks also. It's very much essential that you monitor your stocks and do keep a tab on the quarterly performances, the conference call, kind of commentaries, and that I think would definitely help investors to generate wealth in the longer term. But I said, obviously don't invest in a lump sum amount. Try to adopt a SIP approach when you want to build your investment portfolio.
Okay, so markets expected to remain volatile going ahead as well. Focus on the long-term investing through an SIP mode. That's the advice coming in for all our retail investors. But let's move on and kickstart taking all your stock-related queries. And the first query that we have onto the show today is from Sridhar. And Kunal, he wants he is looking for a fresh investment in Kajaria Ceramics. He's saying that for the past 4-5 days the stock is under pressure, but every time the stock is facing a rejection from 1200 rupees. Going ahead, is this a good time to buy this counter, and any expectation that this level will surpass?
So ideally, yes, the stock would probably be at an attractive price point for itself. So I think last 2 months it's been trading into a range of 1050 support and 1200, as you rightly said, as a resistance. But then the only change which has happened this time around for Kajaria, the charts for Kajaria, is on the weekly charts, the indicators have started to show a sign of a breakdown. Now that could probably indicate that possibly this time the support of 1050 may not hold on to the stock price. So it's better that you lower your purchase price, keep it to just about that 1000 odd mark for Kajaria Ceramics. In case if the stock happens to come back to that level, then it could be an attractive buy.
All right, Kunal, next one also coming your way. This one is coming from Saeed, and he wants an intraday chart of Sona Comstar. He's already bought some 5,000 shares at a price of around 417 rupees per share. On an intraday basis, how does Sona Comstar look to you?
Not attractive. Even on an intraday basis, the stock opened with a mild gap down, I think 417, 18 odd rupees. And then from there, it just slid towards 412 odd mark. Don't see any major change in terms of the outlook for the stock. Possibly it may end the day maybe closer to 410, 412 levels, but I don't see any major comeback on the stock price, at least over the very near term.
Okay, moving on. Avinash, the next question is from Subramaniam. He wants to know what is the fundamental outlook on Tanda platform. He must be holding this counter and currently at a loss. So for the past 6 months, the stock is already down 27%. Going ahead with fundamental view, you expect any up move coming in on this one?
Yeah, I think as far as the business is concerned, the business has been growing quite rapidly, and I think Tanla is one of those companies which is a very value-added kind of telecom service player. My sense is that unless the investor has got a 12 to 15 month time frame, it's unlikely to actually make money in the short term. Fundamentals continue to be pretty strong. The company has been adding a lot of new clients, and plus increasing its kind of product basket. So typically, if the investor has a medium-term view, I would still suggest him that he should not, be impatient, and he should give in a time of at least another 12 to 15 months. By that time, hopefully, FY24 numbers should be out. And obviously, on the basis of FY24, the stocks looks pretty attractive. So I think continue to hold on, and I think this kind of underperformance will obviously get negated as the numbers get thrown out, especially the third quarter and the fourth quarter of FY23.
All right. Next one also is coming your way, actually, Avinash, and this one is coming from Soumitra. And Soumitra has a bit of a longish question, and this one is on Relaxo. He's saying post the news of famous investor exiting Relaxo. However, that coupled with the info that the promoter has also has actually increased stake in the company. So he wants a fundamental view on how should he approach this particular counter, because he's already heavily invested in this particular stock at a price of around 130 rupees per share. So for the medium term, that's for 1 year, how does Relaxo look to you? And for the longer term, that's 3 years plus, how does Relaxo look to you?
Yeah, I think the entire footwear market, Cheryl, in the September quarter underperformed. And I think most of these companies were affected by input costs. Even the volume growth was quite, insignificant. In fact, in case of Relaxo, the volume growth was not in a positive kind of trajectory. My sense is that, the footwear market in India is a very large market, and Relaxo is a market leader in the rubber footwear segment. So I think you have to give in a little more time, maybe the next 12 to 18 months before you could see a decent rise in Relaxo. Coming to the valuations of Relaxo, this company is not valued cheaply. It's a fairly expensive stock, and unless and until we see a strong earnings trajectory coming in, hopefully in FY24 and 25, only then we could see a significant re-rating. So, if the investor has already taken a position, my sense is he should at least give a time of 12 to 18 months. Only thereafter, I think things should look better. And I think, large investors exiting the stock is not a big concern for the stock, considering the fact that the company still enjoys a lot of patronage from the HNI, from the PMS and the fund community. So I think longer term footwear market will grow. They would also benefit. But in the near term, the stock would remain volatile and possibly could underperform. So please keep that in mind.
Avinash, coming to you once again, Nagesha wants to know the fundamental view on AMI Organics. He bought 61 shares at a price of 952, currently at a loss, but going ahead, he wants to know the outlook on fundamentals of the company, and also is this a good time to average out this counter?
See, I think AMI Organics is largely an API player, and I think they have been doing pretty well. In fact, in the last quarter, the management commentary has been quite encouraging. The management mentioned that they could possibly see a decent kind of price revision in API prices, and that would actually trickle down to their operating EBITDA. My sense is, the investor has to take a longer term view because API market had corrected earlier. Most of the larger companies like Aarti Industries also showed softer performances. So I think unless you give a time frame of 12 to 15 months, the API market is not going to improve drastically. But yes, they have a large set of customers. The export basket is also growing. So typically, I mean, from a medium term angle, I would suggest please hold on. Business would continue to grow. But yes, for the next 1 or 2 quarters, margins could be under pressure. So I think shorter term, there could be a little more pain. But in the longer term, if the investor wants to stay invested, he could make a lot of money provided he gives a timeline of at least 12 to 18 months.
All right, Avinash, let me give you a breather then, and let me take the next query to Kunal then. And Kunal, Shri Kutan is holding Torrent Power at a price of around 563 rupees per share. He wants a 6 month to 1 year view on Torrent Power. How are the charts looking? Also, he wants your advice whether he should continue to hold, sell, or look to average.
I think you should look to sell the stock or exit the stock. My sense is that the stock has given a major breakdown below that 480 mark. It was a huge support for Torrent Power. I think over the last 5 or 6 months from June, July, the stock was trying to trade and protect about this major support point. But once that is broken down, I would believe that you could probably expect a correction to maybe 420 or even lower than that in the next 3 to 6 months. So I would suggest that you should look to exit the stock, and maybe if you're looking to purchase it back again, I think 420 could be a good level where you may look to enter, possibly in the next 3 to 6 months.
Okay, moving on, Avinash, coming to you. Satyaveni is looking for fresh investment in Bharat Bijli as well as L&T Finance Holding. His investment horizon is for the next 2 years. What will be your advice?
Yeah, I think from the electrical equipment space, I think Bharat Bijli could be a very interesting bet, considering the fact that it's a very old player, has a very marquee name, has a very good balance sheet, and actually, I believe that in the next say couple of years, considering the kind of investments in the electrification sector plus the kind of consumer durable electrical segment, company should do well. Obviously, in the next 12 to 18 months, we could see some sort of benefits coming in on the bottom line and earnings trajectory growing positively. I would believe that unless he's got a lump sum amount, I think it's better that he can invest in a SIP mode. Whenever the market corrects, this could give him an opportunity to actually buy the stock at a reasonable level, which could actually give him a better ROI. So Bharat Bijli is definitely a buy on declines.
All right, this one is coming from Satya, and it's a query for you, Kunal. He wants to know what's your outlook on Voltas. So he's holding the stock at around 820 rupees per share, and he wants a 1 to 6 month view on this one.
So I think it's nearing the end of a correction for itself. I think Voltas has corrected quite steeply and sharply from 1350 levels to now sub 800 mark. The reason why I expect that the correction should probably end over here is because the indicators are now getting into a slight bullish territory for the stock price. The selling is not as steep and intense as what the stock had seen when it started to fall from those 1300 levels, and then when it broke below that 1000 odd mark for itself. So I believe in that regards, sooner or later the stock may form a near to medium term bottom for itself. So if you bought at 820 odd levels, stock is purchased at 790, which means it's just 20-30 rupees away from your initial purchase price. I think you should consider to hold on.
Okay, moving on, Avinash, once again coming to you. Rakesh Bhatnagar is a long-term investor and he has already invested in AGI Green Pack. He's holding 3,000 quantity at a price of 230. And the other one he has is Rallis India at a price of 196. He accumulated these shares and the stock is under pressure after a weak set of numbers in Q3. What will be your advice in both of these counters?
Yeah, I think Rallis reported numbers which you rightly mentioned were below expectations on all parameters. My sense is that Rallis could take a little more longer, considering the fact that most pesticide and agrochemical companies, the better time frame when numbers come out is normally the first half. My sense is FY24 should be a lot better, and I think a company which is managed by Tata's, which is a virtually debt-free business, very well managed working capital, management, I think will require a little more time. So for the time being, I would suggest that he needs to hold on to Rallis at least for the next say 6 to 12 months. I think hopefully next year should be a better year. And as far as AGI Greenpack is concerned, I think it's a long-term story. I think the investor also here needs to take a 12 to 18-month view. Typically, I think in these companies, the earnings trajectory takes a longer time to get materialized. But definitely, I think long-term prospects look good. So I think both these companies, Shristi, I think the investor needs to take a slightly longer-term view, at least 12, 18 months, and thereafter only he can expect a decent risk reward.
All right, the next one is coming from Hemanta Datta, and this one is for you, Avinash. He wants to know about Praj Industries and NTPC. He's already holding both of them in his portfolio, and he's intending to hold them for the longer term. But he wants to know whether it makes sense to add some more of these counters to his portfolio.
As far as Praj is concerned, Cheryl, I think it's a play on the ethanol market. It's one of the largest players in the country which makes ethanol equipment, and it already is sitting on a very healthy order book of almost 650, 700 crores. The company is always a technological kind of company in the sense that it's working on a lot of new products like compressed biogas, specialty aviation fuel. So all these projects are bound to be reflected in the next, say, couple of years. So possibly, if he has some liquidity, he could definitely average or maybe accumulate some more stocks on Praj, because hopefully the coming budget could also announce some big incentives for the ethanol sector. My sense is that I think unless he has a 2-year view, the risk reward may not be great. So keep a time frame of at least 18 to 24 months here.
All right, so that's the take coming in on Praj as well as NTPC. But on that note, we'll slip into a break on this edition of Buy Now Sell Now. Stay tuned. When we come back, we'll continue taking your stock queries.
Welcome back to Buy Now Sell Now, and let's keep it going with all your stock related queries. And the next question that we have is from Venkat Rao. Avinash, he has two queries. Firstly is on Praj Industries. We have already answered on this one, and the other one he has is on KPIT Technologies. He's a long-term investor and he's holding 40 shares of the same at a price of 730 rupees. What will be your advice for him?
I think KPIT is a very special IT company catering to the electric vehicle and the automotive business, Shristi. My sense is that this is a company which I believe in the next, say, 2 to 3 years is going to show very strong growth considering the kind of technical strength it has in these verticals. In the near term, there could be some challenges, but definitely in the very longer term, I think definitely a lot of money could be made. So if he has some more risk appetite, he could definitely average it out even at the current odd levels. My sense is that in the next, say, 2 to 3 years, the EV opportunity is a very large opportunity, and that is something which KPIT could capitalize quite well. So I think net long term is positive, but in the near term, I think there could be some roadblocks and some challenges as far as the next couple of quarters are concerned.
All right, next one is coming your way, Kunal. This one is coming from Santi on Sun Pharma Jan 1030 call option at 14 with the target that he set is about 1050 and spot stop loss of around 1020. Wants to know what should he do in order to maintain, what needs to be maintained to keep the risk reward higher is what he's asking.
No, so I think you can continue to hold on to the call option. I think it's still at 14 odd rupees for itself. The stock is at 1040. It's consolidating. The stock is consolidating. So I think keeping 1020 as a support or as a stop loss for your trade would actually be a good strategy for Sun Pharma. Now the only the point for the chart to break out would be if the stock crosses about the 1055 mark. That's a minor resistance for Sun Pharma. So if it crosses 1055 mark, then I believe that you could probably see an aggressive build-up of price action for the stock. But then, unless it doesn't break below the 1020 mark, the view would be neutral to bullish for Sun Pharma.
Okay, moving on to the next one, Kunal. Chitra wants to know the fundamental view on LTIM. She is holding 55 shares at a price of 4,287 rupees. For the next 1 month, what could be the likely targets?
Fundamentally, I wouldn't be able to comment, but then on the charts, I think LTIM looks quite okay on itself because over the last 3-4 months, the stock had gone through a very strong rally from 4,000 to 5,000, 5,200, and then from 5,200, the stock is back at 4,200, which means that the stock is trying to establish a base or a support at 4,000, 4,200 mark. I'm not sure whether the stock would get into an immediate rally, but if you happen to give it maybe another 3 months, then there is a possibility that the stock may rally up to 4,600, 700 mark at least. So I would probably just expect that the time horizon needs to be expanded from 1 month to at least 3 months.
All right, this next one is coming in from KR Balan, and he has Adani Enterprises bought at 3,700 rupees per share, Brigade Enterprises at around 390 rupees per share. Avinash, he wants to know whether he should stay put with both of them or look to switch to other counters like Siemens or Cummins.
I think Siemens and Cummins, Cheryl, would be a better bet. And as I mentioned to you, Adani Enterprises could see a little bit pressure ahead of the follow-on public offer. So I think if he has made a decent upside in Adani Enterprises, I think he can definitely shift to stocks like Siemens and Cummins. Siemens has recently got a very large order from the railways, and Cummins is a very large opportunity in the capital goods space. Both these companies are expected to deliver very strong December quarter as well as FY24 numbers. So I think Siemens and Cummins could be a good switch at the current level, provided he's got a 12 to 15 month kind of time for that.
Okay, moving on, Kunal. Pardon, please. Avinash, coming to you. Harika wants to know the fundamental view on Zomato as well as Karnataka Bank. She's holding Zomato shares from a price of 74 rupees, and Karnataka Bank, she accumulated it from levels of 170. Currently at a loss in both of these counters, but she's a long-term investor.
As far as Karnataka Bank is concerned, Srishti, I think she should hold on. I believe that numbers for the December quarter and for FY24 should be very strong. We are seeing a credit growth of almost 17-18%. So I think that should percolate down to better growth in advances and deposits, and obviously profitability for Karnataka Bank. So I think after a very long time, Karnataka Bank has started delivering. So I think she could expect better upside in the next, say, 12 to 15 months. So continue to hold on to Karnataka Bank. And as far as Zomato is concerned, I think she needs to be a little more patient because the company still continues to burn a lot of cash, and the company is yet to record any positive operating EBITDA or operating cash flow. So my sense is here, on any upside or any rise, I think if she can exit the stock, that would be better, because clearly most of these fintech companies profitability is way ahead and valuations still seem to be quite expensive. So I think she has to take a call whether she wants to wait for the next 3-4 years, or whether she wants to switch over to some other promising sector like capital goods or housing finance or autos, where I believe the market presents a lot of opportunities now.
All right, the next one is coming your way, Kunal, and I have actually a couple of them that are lined up for you. Next one is coming in from Abhijit, and he's saying that he's holding HDFC Bank, as well as HDFC Life in his portfolio for around 1 year, and he's sitting on good profits. So now he wants to know whether he should exit and re-enter or average. What should he do? His view is for the next 6 months to 1 year.
Well, I would say extend your sitting for another maybe couple of years. I believe that these stocks are now poised for a decent breakout on the upside. This is the first stage of a rally for HDFC and HDFC Limited. These stocks are coming out of their multi-month consolidation, specifically HDFC Limited, coming out of a consolidation from 2,550 to 2,650 odd mark. So it's just at the midpoint of this breakout of this consolidation. Momentum has kicked up, for the stock in the last couple of days. So I would expect that this breakout should happen pretty soon. And eventually it will get into a very slow, steady and a gradual uptrend for itself. So I think if you're sitting on good profits, you must have bought at much lower levels for the stock price. I think there should be no reason for you to exit the stock in a hurry just because you're sitting in good profits.
Okay, moving on to the next one. Avinash, Tumala Rao is a long-term investor and he is already having 2x of returns in L&T. He is holding 700 shares from a price of 1147 rupees. The stock is near its all-time high levels. What would be your advice? Continue to hold on or book some profits at these levels?
I think he should book out some so that his original cost is recovered. The margin of safety would get better. Obviously, if he books out some profits and converts, makes his original holding almost free of cost. And the rest of the quantity, Srishti, I think he should hold on. My belief is that L&T is a very strong developing story, and obviously in the coming budget, if manufacturing and capital goods is given a further thrust, then that could definitely benefit the company. Definitely L&T looks poised to move further, but considering the kind of price he has entered, he should book out at least 30-40%, and the rest of the stock he can hold on.
Next one is coming from Raghupati Gopal, and he is echoing a sentiment where most of the Maruti Suzuki shareholders would be echoing Kunal. He's saying that the stock is trading between 8,000 to 8,500 and has not been able to break above the 9,000 mark and sustain it. Even if it's breaking, he's not been able to sustain it for a while. He's holding around 15 shares for the long time and at around 7,900 rupees per share. He is looking for a target of 10,000 rupees plus. What should he do? We know that Maruti came to the kissing distance of 10,000 rupees in the month of, I believe, October, November or so. From there on, it has lost steam. What should he do?
I think you should continue to hold on. Now, even if the stock is underperforming, it requires a lot of, I would sense that when stocks, they rally up higher and they're not able to sustain those higher levels, that's because the price action is not backed by strong concrete news flow data points for the stock price, and that's why the stock slips down and then gets back into a trading phase where we typically call it as a mean reversion phase. Now for Maruti, that range is 8,000, 8,500 as a trading range for itself. But on the recent charts and especially over the last 1 or 2 weeks, the stock is trying to make a comeback again. Volumes have inched up higher for the stock price. The price activity has improved. Relative strength has kicked in for the stock with respect to the overall market. So for example, you don't see the stock underperforming. For example, on a day like today when the markets are slightly negative, the stock is on a slightly positive footing. So that itself is an indication that the stock is kicking into relative strength. That's a sign of a turnaround for the stock price. So I would suggest to hold on to Maruti for some more time.
Okay, that's a hold coming in on Maruti. But Kunal, once again coming to you. The next one is from Kaushik Mitra, and he's looking for a fresh entry in two counters, NBCC or NMDC. Both of these counters for the 1 year horizon. Which one will you pick?
I would suggest not to distinguish between both of these stocks and just pick one. You should ideally go for both of these stocks. Both these stocks are looking attractive on the charts. NMDC is heading towards a big breakout on the monthly and the yearly chart time frames, and I think NBCC as well is trying to form a major bottom for itself. So I would suggest to go with both of them. You can probably go with 50% allocation for each of the stocks.
All right, on that note, actually, we'll slip into a break on this edition of Buy Now, Sell Now. We will continue taking your queries after the break, so viewers, don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. A couple of minutes left, experts. So let's try and take as many queries as possible in that time. Kaustubh has sent the next query for you, Kunal. On United Spirits, he wants a technical view on this one. And is it a good time to accumulate the stock for the longer term?
I think it's a good time to accumulate. The stock is seemingly coming back towards a major support of 820. Just 20 rupees away from those levels, so you can start nibbling into the stock price.
Okay, moving on, Avinash Chandrasekhar is holding 2,000 shares of McLeod Russell at a price of 28 rupees. He's a long-term investor, wants to know what is the fundamental outlook on this one.
See, I think there has been a takeover the management of this company, Shrishti, and I think obviously this company owns a large piece of tea estate land in premium places like Assam and Darjeeling. So I think continue to hold on. Some more commentary and some more confirmation on the data points is needed. I think if he can hold on for the next say 12 to 18 months, he should get a decent risk reward.
All right, this one has come from Prashant, and a bit longish detailed query is asked Kunal on ITC. He is holding 200 shares of ITC at 203 rupees at a profit around 62%, and he wants to add more. What he's asking is, if I add another 200, my profit margin will become 30%, and is this the healthy way of adding?
Yeah, absolutely. Don't look at 30%, but look at the additional amount of quantity which you've added and the the rupee profit as well for stock prices. And I think it's also a good strategy to try and average out on a winning trade rather than averaging out on a losing trade. Because if ITC manages to come out of this multi-month consolidation and breakout on the upside, look at the extent of profits which you can gain on the stock, assuming if it comes back to say 360, 380 mark for itself. So I would believe that it's a good strategy if you're looking to average out ITC.
Okay, but another query is also on averaging out. Kunal Balakrishna wants to know, is this a good time to average shares of Wipro? He's holding 200 shares at a price of 600 rupees. So average, hold or sell at these levels?
So you can continue to hold on. I would not suggest to average at current levels. Ideally, a best time to try and average such stocks is when there is a first sign of a confirmation of a breakout. Now, the breakout in terms of price point could be at 420 mark for Wipro, or in moving averages on 200 DMA terms, it could be around 430, 440 mark for Wipro. So I believe these are the levels where you should keep an eye. In case if the stock crosses those levels, that's where you should look to average.
All right, we are facing some technical glitch with Avinash's feed, so we'll get him back shortly. But for now, Kunal, technical view on ICICI Prudential. This query is coming in from Sagar. He's entered the counter at 450 levels as trend reversal was happening. Also, divergence and risk reward was favorable. Do you see bigger targets, or is it better to book out and re-enter?
I see much bigger targets for ICICI Pru. My belief is that the stock is going through a major multi-month turnaround for itself. Wouldn't be surprised that possibly in the next 12 months or so, the stock can even come back towards 600 marks. So I would suggest a hold.
Okay, Kunal, the next query is from Madheshwaran, and he wants to know, is this the right time to enter shares of Uflex? The stock is already down from 800 rupees to around 530 odd levels now. So what will be your advice on this?
The minor bottom is in place for Uflex around the 550 mark, which it tested almost a month back. You can start to nibble into the stock price, but I would sense more confidence can be achieved if the stock doesn't break below this 550 mark, in case even if there is a minor correction. So you can start nibbling at current levels, wait out for maybe one more round of correction, and if the stock doesn't break below that 550 mark convincingly, then I believe that that's a sign that the stock has formed a major bottom in place. So as of now, small portions is what you can look to average.
All right, KJ Singh wants a long-term view on KPIT Tech, as well as Jayakrishnan wants to know about KPIT Tech, already holding at the levels of 690 rupees per share. Wants to know whether he can add some more at these levels. Kunal, since we don't have Avinash with us right now, so would you want to take both the queries?
Yeah, I think you can look to hold on to the stock. I would not suggest an average at current levels because there is no sign of the stock getting into any major support zone. So it's at the midpoint of a major trading range. I think 500, 550 is the support for KPIT Tech. So in case if there is a correction of 10% approximately, then it makes sense to buy the stock or average. If you're looking to add on to another IT names, then I would believe look at even Redington. I think the stock is at 185 approximately. It's also a good stock from the mid-cap IT space, which looks very attractive from a longer-term play.
Okay, Kunal, the next question is from Kabir Bedi, and he bought AU Small Finance Bank, 150 shares exactly at the current market price. He wants to know the short-term view, probably for the next 3 to 4 months. What is your outlook?
See, it's going through a major consolidation over the last 2 years. But the good part about the chart is that it's a healthy rising consolidation, which is very rare to see in such kind of banking stocks, private sector banking names, or high beta stocks. I would sense that the stock should break out pretty soon. So if you have a 3 to 6 months time frame, I think you should definitely look to hold on.
All right, the next one is coming in from Pavan. Wants to know whether it's a good time to hold on to IRCTC or look to exit, because he is definitely concerned about the dip in the stock price.
I think you can just continue to hold on. IRCTC was a stock which was in flavor in 2020 and I think 21 first half. But then, this is what happens to stock price, which remains as thematic stocks for a certain period of time. They go up into a exponential rally, 3x, 4x. And then when these stocks come crashing down, traders or investors are left out with buying the stock at higher levels or holding the stock from higher levels. So I would suggest that as at current levels, I think it's just that you have to keep on holding the stock price and wait out for this phase of consolidation / correction to get over. Whenever the stock rallies up higher, I think it should probably break past about the 1000+ levels, which could happen in the next 1 to 2 years also.
Okay, that's the advice coming in on IRCTC. But with this, viewers, it's a time to wrap this edition of Buy Now, Sell Now. Thank you so much, Kunal and Avinash, for joining us today on ET Now and helping all our viewers with their stock-related queries. But with this, it's a goodbye from me and Cheryl and the entire team who put this show together. Thank you so much for watching.